The U.S. markets today have opened in green. The Dow Jones Industrial Average is in a free fall, and Wall Street is gripped by a sense of dread not seen in nearly a century. With the index plunging over 9% this April, the Dow Jones is on course for its worst April since 1932. The year 1932 was the year of the Great Depression. As of Monday, the index has shed nearly 1,000 points, leaving Wall Street stunned and retail investors grasping for exits. At the center of the financial storm sits the Trump administration. The tariff turbulence have left the American market jittery. A complex web of factors is fueling the drop. Trade tensions remain unresolved. Corporate earnings outlooks are clouded by uncertainty as well. Of course, there's a growing perception among investors that monetary policy may face new turbulence. One point of concern is speculation that President Trump could dismiss Federal Reserve Chairman Jerome Powell, raising fresh questions about the independence of the central bank. President Donald Trump exposes confidence in the U.S. economy and is hopeful the trade negotiations are well on track.
They've been fun. We'll end up having a deal. We're going to ultimately have a deal with anyone. If we don't, we're going to make it anyway. But we're going to ultimately have. The economy is very good. We don't have inflation. Energy's down at the lowest it's been in years. We hit actually $1.98 recently in a couple of states. I think we're doing really well.
Worse still, the typical lifeboat for investors, U.S. Treasury bonds and the dollar, are under simultaneous pressure. The American greenback is at a 3-year low. There is no safe harbor. Bond prices are falling even as stocks dive, pushing yields higher and erasing the usual hedging advantage. A 0.16 percentage point rise in 10-year Treasury yields this April tells the story. Investors are dumping everything. Gold, on the other hand, is shining bright. The yellow metal briefly broke above $3,500 per ounce to an all-time high. Prices of gold, traditionally seen as a safe haven asset amid economic and geopolitical uncertainty, have risen by nearly a third so far this year.
Gold is not affected by price because gold is always safe investment for everyone. So doesn't matter, gold will even go more, the people will buy. It's a kind of land. When you buy land, always expensive.
While the White House has scaled back some tariff initiatives, investor sentiment remains fragile. Businesses are still digesting the impact of earlier trade measures, and many corporate earnings calls have included cautionary guidance for the quarters ahead. The Powell-Trump dynamic adds another layer of complexity. Though the president has voiced frustration with the Fed's policy stance, Chairman Powell has maintained the Fed's course, emphasizing economic data over political influence. Markets are watching closely.
Really, the playbook that worked over the last decade, sort of momentum, high growth, U.S. tech, like we're upending all of that. And so now it's a new playbook is really needed. Value is going to do better, we think. Non-U.S. assets, companies with exposure outside of the U.S., international stocks, which have really lagged, those will probably do better. Obviously, gold is doing well. So it's sort of like everything is topsy-turvy right now, but investors can't just hide under their beds. You really got to stay invested.